Hello and welcome to Capital Market Live from Channels Television. I'm Will Ibang. First things first, as always, let's check in on the markets and see how your stocks performed for the week. We begin with Europe, where stocks markets followed the global positive trend on Friday, extending the previous session's gains as investors take stock following the slew of economic data published this week. The UK's FTSE 100 closed 0.04% higher at 7,348 points. France's CAC 40 was up by 0.88%, and Germany's DAX was over 1.6% in positive territory. Across Europe, inflation data came in hotter than expected. A flash estimate for the Eurozone showed headline inflation eased from 8.6% to 8.5%, but this was above a consensus estimate, while core inflation rose from 5.3% to 5.6%. Now, Asia-Pacific markets mostly rose on Friday following Wall Street's gains overnight after Atlanta Fed President Raphael Bostic said he's firmly in favor of sticking with quarter-point hikes. China's services sector saw a jump in activity, according to the sidechain S&P Global Services Purchasing Managers Index, with a reading of 55 in February from 52.9 in January. Hong Kong's Hang Seng Index rose 0.68% in its final hour of trade, while the Hang Seng Tech Index gained 2.21% in mainland China. The Shanghai Composite climbed 0.54% to end Friday at 3,328 points. And the Nikkei 225 in Japan rose 1.56% to finish, leading gains in the region as inflation in Japan's capital showed easing in February from the previous month. Now, stocks rose on Friday as Treasury yields eased from their recent highs in the U.S. and investors weighed the cumulative impact from Fed hikes already implemented and digested this week's comments from the central bank. The Dow Jones Industrial Average rose 387.4 points, that's about 1.17%, while the S&P 500 climbed 1.61% to 4,045 points, and the Nasdaq Composite gained 1.97% to close. The yield on benchmark 10-year Treasury note dipped below the 4% threshold. Traders have been watching 4% as the key level on the 10-year that could trigger another down move in stocks. Now, back home at the domestic equities market, the bullish momentum in the Nigerian stock market switched into a higher gear as investors cherry-picked stocks following decent 2022 full-year corporate earnings releases. The all-share index advanced by 1.06% week-on-week to close at 8.6% year-to-date. And this was driven by buying interest in Girigu, Access Holdings, Peter Cousins, and Airtel Africa. However, activity levels on the BOS were mixed as trading volume surged by 138.5%, while trading value traded dipped by 43.5%. Sectoral performance was broadly positive as the consumer goods index recorded the most significant gain, followed by the banking, industrial goods, insurance, while the oil and gas index, the sole gainer for the week, tumbled 2.36%. This was driven by losses in Seplat and O&O. Girigu emerged top performer for the week, followed by C&I Leasing, while Chams PLC led the underperformers. Chams in the ICT industry now led the top trades for the week, followed by Capital Hotels and Transnational Corporation, contributing 54.33% and 14.22% to the total equity volume and value traded in the week. Meanwhile, the NASD OTC Securities Exchange Index closed the trading week in positive territory. The unlisted equities index rose more than 1.3%. However, turnover was much lower when compared to the previous week. Volume traded fell by about 79% to 38.15 million units, while value dipped by 67.94% to 57.97 million naira. Afriland Properties PLC topped the gainers chart for the week, followed by Friesland Campina Wamco. Central Securities Clearing System was the only loser this week. Now, joining me to review the market, some of the market activities, some of the key events in the market, Mr. Rotimi Olubi, Managing Director, ARM Securities Limited. Many thanks for joining us on the program today.
Thank you for inviting me.
Now, this exchange has been phenomenal throughout the week, throughout last week and the previous week, we've seen some bullish, movements in stocks. And they both hit, record highs. We saw the all-share index crossing the 55,000 level. We also saw the market cap hitting the 30 trillion naira mark. What would you say spurred investors' sentiments in this regard? And despite the election noise, we did see election on one hand, the earnings on the other hand, cash crunch. And if I say there's a third hand, what really spurred investors to keep on going despite all this?
Yeah, so very interesting. I think good question. If you look at our market, I think sometime in the beginning of the year, there's what we call the January effect. It's just an anomaly in the capital market. So sometime in the early part of the year, you see a lot of interest in the equities market. Another thing we also observed that led to this rise in the market is we are also in earnings seasons. You see a lot of companies coming out with audited accounts. Some of them come out with unaudited accounts. And then investors are also very interested in dividend-paying companies. For some of them that have done well in Q1, Q2, and Q3, some fundamentally sound companies, you see investors try to position in anticipation of dividend payouts. So that's part of the reasons why we saw the market moving up. Another reason also why the market moved up significantly is that our market has changed significantly. As at the last foreign portfolio report that we got from the NGX, we saw local participation has risen to as much as 87% compared to foreign investment in our market is as low as 13%. So that means that we see more of local play in our market. And then, so we also understand the local play. They understand our political environment. So they factored in the uncertainty. They know election will come and go. Dividend will still be paid. So we see a lot of interest. We see a lot of investors staking out their money despite the electioneering campaigns and then also the risks of election, because they know it's most certainly at the end of the year, companies are due to pay dividend. Another reason why we saw the market moving up is also we saw some selected security that are ICAP, like the likes of Girigu paying dividend of 8 naira. We saw MTN also paying dividend of as much as 10 naira. We saw Dangote Cement also paying dividend of 20 naira. So those are ICAP stocks that just slight appreciation in their share prices can also move capitalization and index value. That's the reason why we saw the market buoyed.
Interesting analysis there, because I was wondering, because if we look at historically, any election period, stocks, that's when, we see a downtrend in stocks. But this particular one is like different. It's just, it kept moving on, like the election wasn't going on. And as you rightly said, we have more domestic players. Maybe that's why we didn't see a lot of capital flights. Yeah. We saw more investors, playing in the market because they have nowhere else to go. They really have to invest in their market. Where else would they take the money outside the country? I assume not, or I guess not. But I did mention the cash crunch hitting the market, and it's, in a way, it did affect activities in the market. But we're going to go back. We're talking of the cash crunch. We know that the Supreme Court has just recently, yesterday, nullified the central bank's Naira redesign policy. What are your thoughts about that? Do you agree with what the CBN and the Supreme Court's judgment?
I think it was a welcome judgment. Nigerians, they've gone through a lot within this period. Our environment is so cash-driven. We're not there yet to adopt total cashless policy. And then also this redesigning, I think that the CBN perhaps in terms of the timing, they've actually not factored the timing right. And then also sensitizing the populace also. They also didn't do that right. Perhaps that's why we saw this challenge. I think it would have been best if they've given reasonable timing, or perhaps if the old currency had run pari passu the new currency also. And then also, as a country, we are not digitally, we don't have robust technology infrastructure to support even a cashless policy, or even in some areas, they also don't have access to telecommunication gadgets and all that. For you to even use your POSs. In fact, in recent time, we saw people challenged using channels, payment channels, despite inability to access cash. We're actually not ripe enough to have that kind of quick installation of a new currency and then taking off the old almost instantly. I think it would have been best that we have enough time for people to be able to adjust structurally.
And do you think the CBN will comply with this judgment?
I would expect them to comply because Nigerians have suffered, and then I don't think we want to continue to have them continue to suffer.
Okay, we also did see something interesting happening. The CBN keeps coming out with, it hits us with, back-to-back with different policies. And we saw the latest one with the CEOs, revising the tenures for MDs, CEOs, and non-executive directors of banks and financial holding companies to 10 years. And we saw a lot of tier one banks and tier two lenders being affected by this. How do you think this will play out? Will this measure, affect investors' confidence in the banking sector?
I think the whole essence of this is also to improve governance. We don't want a situation where we have a perpetual director. So for investors, I think it's a welcome idea. I think the only challenge is that we may begin to have challenges with having experienced hands to be able to replace some of those long-serving directors on those boards. I don't know if some of the banks are putting in place some structural succession planning such that the banks will run without this set of individuals that have been around for a while. I think the banking sector is a specialized industry and strongly regulated. And I think the point is that there must be succession planning in place. We shouldn't be seeing this circular coming as a shock. There should have been support system to be able to accommodate a policy like this. But I think in all, it will strengthen governance, and I think it's good for investors, either locally or foreign. I think they will perceive us as serious-minded people.
Okay, we'll come back to that. But in other news, we saw Tier 1 lender Zenith Bank saying that it has received approval in principle from the Central Bank of Nigeria to convert its present operational structure to a holding company. In a statement sent to the Nigerian Exchange, the bank says that once substantive authorization is received, the bank gets a license to veer into other businesses within financial services, including pensions, insurance, asset management, and fintech. Zenith Bank joins a list of other lenders such as FBN Holdings, Stanbic IBTC, FCMB Group, GTCO, and Access Holdings that are already leveraging those businesses to buy up revenue. So back to you, Rotimi. This is good news for Zenith Bank.
Yeah.
But however, this latest policy, how do you see it affecting Zenith Bank's decision or, intention to, become a holdco, saying that they've approved the current CEO, that's the MD, Jim Ovie, as the chairman of that holding company?
As a Jim is very experienced, and I think he had steered the affairs of the bank for many years, and I think his relevance cannot be overwritten. And in terms of the old coach structure, how will it benefit shareholder? I think there is enhanced shareholder value. I think for the company too, they have a better image. As an old co, you have cheaper access to funding. Your credit rating also improve as an old co. So in all, I think it will benefit. The balance sheet size of the business, even for shareholder, it will also improve. So we're seeing enhanced shareholder value. In fact, for an old co structure that they are going into, it gives them the opportunity to also diversify into some other areas of opportunity. So in that, they will constantly continue to create value for their shareholder. So I think Zenith is long overdue for them to have this old co structure, because the business has been around for a while, and I think it's a sustainable business.
Yeah, I'm talking about now the operational and leadership structure of the holding company. How would it affect with the CBN's tenure limit, the latest policy by the CBN, and this old co structure, seeing that they've approved the current CEO as the chairman of the holdco? How would that, play out? Because he has already spent over like 20 years now. So how would that work?
I think that it won't really affect his coming on board as the chairman. I think there's still a room in that policy. If you look at the circular very well, I think there's a room for him to assume that position. But if you look at Zenith as a group, I think they have good hands that are skilled, that are within the group, and that they'll be able to fill in case that some of the executive are already, their tenure has passed what the CBN circular currently interprets.
Okay, so just very quickly before we go, we say Gerigu's share price jumping up this week. It added 27.45% to its share price this week. It opened at 255 naira at the beginning of the week and closed at 325 naira. Are the fundamentals strong enough to back this market price? Is this the true market value or market price for Gerigu at the moment? And do we see a correction anytime soon?
So when it comes to Gerigu's shares, is closely held. I think what was listed was slightly less than 5%. And then, so what we've seen in the market, we've been seeing a lot of crossing, I think there are some institutional buying into the shares of the company. I think Afrexim also took about 5% of that company. So, but in terms of the consistent share price rise, I think it's sentimentally based, maybe not very sustainable, but also because the float is also not evenly distributed. We might not see a threat in terms of the share price adjusting downwards almost immediately. Yeah. So that's it for Geregu. In terms of fundamentals, they just released their audited account. So we have not been seeing a lot of their results because they just got listed newly. So I think with time we'll be able to place proper value on the share price.
Thank you so much, Managing Director, ARM Securities, Mr. Rotimi Olumi. Thanks for joining us this evening and sharing your perspectives on the program.
Thank you for inviting me.
Next, the economic policy direction of Nigeria's president-elect and implications for the capital market. That's after the break. Just stay with us. Welcome back. Last weekend, Nigerians voted in the presidential and National Assembly elections, and the candidate of the All Progressives Congress, APC, Bola Tinubu, emerged as president-elect. Every new administration brings with it new players, political, economic, and financial. And this means that as political power changes hands, so does money. And how that money moves depends on how markets expect their financial returns to change. Mustafa Alao, head of research, ARM Securities, will be sharing his perspectives on the impact of a Tinubu's presidency on the financial markets. It's good to have you this evening, Mustafa.
Thank you. Thanks for having me.
Now, in the first instance, when the president-elect was announced winner, we saw a very quick reaction in the bonds market, especially the Euro bonds market. Is this an endorsement, would you say, of Tinubu's, the president-elect's capacity to change things or to turn things around? Or how would you say, or is it going to be business as usual?
Yes, there has been some reaction following the announcements of Asiwaju Bola Tinubu as the president-elect. However, the reactions that have come about are not because Asiwaju Bola Tinubu was announced as the president-elect. It's because a president-elect was announced. So essentially, it could have been anyone. The main factor is the political risk. So there's a lot of uncertainty that arises, in political seasons, due to the potential radical change in policies that could come about with a new administration, due to a potential show of violence, even in some countries, especially in places like the sub-Saharan Africa region. So with Bola Tinubu coming in, a lot of the political risk, which a lot of investors take into consideration when they look at different instruments, was sort of waned, right? So like the Eurobonds, which you mentioned, if you look at the Eurobond has seen a bearish trend for quite a while. It went up to, that's the yields, about 12%. So price was falling. But when Bola Tinubu was announced as the president-elect, we saw a bit of a U-turn in that regard, right? So we saw that Eurobond started to ease a bit. Why? Because of the political risk easing, right? But then, when we saw that the presidential candidates of the PDP and the presidential candidate of the LP came out and had press conferences, and the PDP said that they're going to go to court, we saw a reversal again. So essentially, it's the risk that people are taking into consideration, because now, when there's agitation and there's a call for people to go to court, the risk factor comes back into play. And if you look at our Eurobonds figures, you see that we've been the worst performing for a bit now. So if you look at over the last 30 to 35 days, Nigeria is one of the worst performing in terms of its dollar bond in the emerging markets. I think the only people who are doing better than are Ecuador, Argentina, and Ukraine, who is at war. Right, so Ecuador is doing like minus 28% in terms of its return. Nigeria is doing at the moment about 9%. That's over that 1 month period. So at the moment, hovering around that 12%, that signifies that we're still in that junk status, because our Eurobond now has a country risk premium of about 10% when you compare it to the US Treasury security. Right, so there's still that risk there. There's still that bearish sentiment there. But the reason why we saw some waning in that is because of that political risk being a little bit abated. Political risk has been things that has been happening quite a while. We saw it happening in Kenya when Odinga and Kenyatta went to court in 2017, and then Kenyatta was announced as the president again, that he won the presidency, right?
Okay.
You know, so there was that risk that was waned off in the Nairobi Stock Exchange. Also, the same thing in the US in 2016 with Hillary Clinton and Trump. So I think that's what's playing at the moment, and that's what's impacting the markets, and not necessarily Bola Ahmed Tinubu himself, because really investors, I don't think they really buy into promises and manifestos as much.
So they're not reading any body language here. They're just following the numbers and following the money and seeing how it's working. So the president-elect has, you know, in his campaign, one of his campaign promises was to remove fuel subsidy, and we're seeing and the full implements the PIA, to its full impact. But we're also seeing international communities and the Manufacturers Association of Nigeria calling on the president-elect to focus first on solving the FX issues. So do you think, what should he jump in first to do? And do you think he's able to resolve this within the short period of time when he takes office, in June?
Okay, so first of all, the subsidy issue, of course, that's something that Asiwaju Bola Ahmed Tinubu explicitly stated in his manifesto that he was going to sort out, that is, he was going to take out, right? So he promised the full implementation or an acceleration of the implementation of the PIA, the Petroleum Industry Act, and of course that includes taking out the subsidy, right? And there's largely there's there's expectation that it's going to continue in the line of his predecessor in terms of his fiscal responsibility, if I want to put it that way, right? With continuous borrowings, with some of the things he espoused that he was going to do with a lot of expansionary fiscal policies, right? So expectation is that if he's going to toe that line, then of course he's going to need that. How much did they say that we incurred in terms of petroleum subsidy last year? Over 6 trillion, right? That's a lot of money. That's about 13 billion US dollars, right? So he's going to need that money, right? And to be able to pump it back into the economy. So he has explicitly stated that. And in terms of FX issues, which everyone in Nigeria knows that we're dealing with at the moment, I think when you're talking about FX issues, yes, you can talk about some of the things that have been espoused by some of the bilateral organizations like IMF, for example, that, we need to unify the exchange rates, right? But okay, when you look at it, when you unify the exchange rates, what's the naira going to come at? So if you want to talk about dealing with currency issues, you need to go to the very base. And what is that? Dealing with or looking at the issue from a perspective of capital importation, from a perspective of balance of payments. What we need to do is that we need to improve our revenues and we need to reduce our importations. And if you look at Bola Ahmed Tinubu's manifesto, you see that he has already talked about the fact that he's going to implement some policies to help in this regard. So, for example, if we take out the factor of importing petroleum products, for example, because he said it's going to accelerate refining activity, and even though I know a lot of administrations have said that in the past, but should we see that coming to fruition, that's going to help us save significantly, and that's also going to ultimately help with our FX position. Also, he has also talked about investing in our oil sector, because our oil sector, although it's just about 7% or maybe even a bit less of our GDP, contributes about 80 to 90% of our FX revenues in this country, right? So if you look at our oil sector and some of the things that Bola Ahmed Tinubu said he's going to do within that sector, he said he's going to invest in frontier projects, invest in explorations. He's going to look at increased JV partnerships. He's going to look at explorations in some untapped areas like the Lake Chad Basin, So these are things that, should he implement, because remember, he hasn't gotten into office yet. Time hasn't passed yet. All these are just based on his promises and his manifesto.
So we're going to see how his promises work hand in hand with the reality on ground, because
Absolutely.
There's one thing about making promises and there's another thing about implementing them when you actually see what's on ground and what you have to work with. Does he have enough capacity to do that in terms of revenue? Does he have enough hands? Well, we expect he's going to put a team together, but how that's going to work very quickly to turn Nigeria's situation around, we'll just watch and see. Mustafa Alao, Head Research, ARM Securities Limited. It was good to have you on the program. It was interesting talking to you about what's to come. Thank you
very much.
And that's it on Capital Market. Do join us same time next week. Don't forget you can watch this again on our channel's television page on YouTube. Also, follow us on our other social media platforms to get updates. And Will Ibang is bye-bye for now.